All right. Welcome to what is this, like the third week of the entire year? I don't even know what to make of this. Like, this is pretty ridiculous price action for the very start of 2026. I mean, first we were supposed to have world peace and then invaded Venezuela, took the president, and now we're talking about Tariff Tantrum 2.0. I don't know. I guess this is just how 2026 is, or betting at how the market is nowadays. But things are looking pretty brutal out there. I mean, not for everything, but for some stuff, it's looking very nasty out there. Let me go ahead and share the screen here of Lay stock market. And well, I mean, it's a pretty bad day. It's a pretty bad day for not only tech but also SPY, right? So my opinion is that you have the market somewhat broadening out. I would say a pretty nasty sell off, but not to the degree where it's like, oh my goodness, we're going to have like a nasty bear market here. But the RSP is outperforming the SP 500. So a lot of it is weighted toward tech being sold off, which is the reason why I see Qs basically underperforming the market. But IW is only down 1.3%. If this was like a ridiculous sell off, wouldn't you see a bit more of that action happening here? Also, crypto is, of course, selling off as it usually does. But a lot of these stocks out here are not doing that bad. I mean, like Path is only down 63 basis points. On Semiconductors is only down 91 basis points. AMKR is up 2.44%, right? I mean, you're obviously going to have BMNR down a lot. But where's the sell-off happening mostly? It's happening in big tech. Apple's down 3%. Amazon's down 4%. We're going to talk a little bit about Amazon, getting a little bit into Andy Jassy, some things he had to say. Also, the Tariff Tantrum 2.0. I mean, this is obviously what things are centered around. I thought it was going to be more on the credit cap. I don't know. Is that old news now? Like the 10% cap? Because no one's talking about it anymore. It's all about the tariff tantrum. Google is down 2%, but still near all-time highs. Meta is down. It's almost below $500. Was it below? No, sorry, 600. Actually, the bottom was $600 today. Bounced up considerably since then. Things are looking very dicey this morning, but now we're trading near the lows again. Tesla's down 3%. NVIDIA is down almost 4%. Netflix is actually reporting earnings today. I will not be streaming the earnings today for Netflix. I'll probably be off the stream by then. Microsoft is down 1%. But, I mean, Micron's up almost 1% today. Intel is up today. SkyT, oh, wow. Completely regret not buying this, but whatever. SanDisk is up 9%. So sell everything and buy my memory is what it really looks like, right? But of course, you have these parabolic data center stocks that are down, pretty considerably from yesterday. Things are looking pretty good for Iran this morning, but clearly it's sold off quite a good amount. Nebius is below $100 again. TeraWolf is red. CoreWeave is down 8%. Core Scientific, all of these things are down a lot. Like, you're going to get the high beta moves. Next Decade is back below $5. Pretty interesting move there. VG is giving up some of the gains from last week. ASTS was green this morning. It's no longer green anymore. Rocket Lab is down about 8% today. Peloton is a garbage dumpster fire. Yeah, no, someone said it in there too. ONDS is up today. Still up 7%. It was up as much as in the $14 range earlier. No longer there anymore. And Transmedics was up, I think, about 1% today, but then sold that off. Lemonade was green for a minute. LifeMed is down. HIMS, well, I mean, you're not going to have a proper red day without HIMS being red. That usually doesn't really happen. Grab, is this right? Grab is green? That's weird. Someone needs to tell people about Grab being green, because that's pretty wild. IONQ was up 5% today. Now it's only up 1%. I don't know. It's like a really weird day, in my opinion. You have like all of these stocks, like some of them deep red, but some of them are like, is there really like a sell-off happening? But I'll tell you something right now. This is going to be the second close below the 50-day moving average for SPY since late November, right? We've had this happen a couple of times, but we just had new all-time highs. Like, this is like a really weird chart here, right? So if I look at this SPY chart, I mean, you have like a little bit of weakness, bounce off the 100-day moving average, but it didn't get below the 50 here. Got below it here, stick save. Got below it here, got saved. Got below it here, saved. Are we going to have another saving grace here? We will see. Oh my goodness, man. There's always always people trolling in the chat. Just trying to. Yeah. We missed this, Raj. We missed this. I mean, hey, at least it's not at $800, but still, man, Raj and I were looking at the stock when it was all the way down here, like just above $100, and even after the tariff tantrum. Can't win them all, man. Can't win them all. So what do we make of this? Well, let's get a little bit into the show here. We're going to go a little bit over the tariffs. We are going to talk about, is this a fake bear market? Actually, we kind of went over that one a little bit. Some green stocks today. Is this like an actual real bear market or not? Coming up. Elon Musk versus Ryanair. That was actually pretty funny news starting late last week, and that's starting to get a little bit heated up. I don't know if the bag holders of Ryanair or maybe the chief executives and whatever it is want to get sold at a premium. If Elon Musk buys them, I don't know. Kind of sounds a little bit weird, but there's definitely a bit heating up going on over there. Another short report from AppLovin. AppLovin was, let's see. AppLovin is, it's pretty much flat, but it was down like 8% this morning. I commented on that one on Twitter, so I'll comment on that one in a minute. Content creation, BMNR. I mean, it looked a lot better this morning, but I don't know. Something tells me that $200 million investment in Mr. Beast. I know a lot of people here might own BMNR, but that was pretty interesting. There was a tweet from Heinze regarding the TAM for content creation. Here I am creating content as well. We'll comment a little bit on that one. And also there's a bit of an interview with the Micron CEO. We also did hear about the news last week where, he bought some stock last week for the first time since 2021. So we'll see what happens with that one. So let's get right into it. What is going on? Amando, how are you? What is going on? A2 Zev? Okay, A2 Zev. What is going on? Freddie Phillips? Raj, what's going on, baby? How are you doing? EFan, Spicy, Ticker Tap, always showing up first. What's going on? Raise, Alf. All right, let's get into the show. Right now, if you are watching on my channel, all 45 of you, I'm going to be stopping the stream very soon, and it'll just be on the Wolf Financial channel. Again, as mentioned it, moving the content over there, but just showing a little bit of love in my channel, letting the word get out there. If you are just tuning in, go ahead and like and subscribe to the video on Wolf Financial on YouTube. All right, we got Wolf_Financial on YouTube, where you can engage with me on here through the chat. All right, let's get right. Oh, I forgot to see, is Zeta still red? Is Zeta still white? Red, green, I mean? Yeah, Zeta's up 1%. Not bad. Getting a little bit of a weakness here into the close. All right, so let's start off here with the Tariff Tantrum news that developed over the weekend. I'm going to open it up right here. Why does it do that all the time? Why you got to do that to me? All right, here we go. I'm going to copy the link over here. Boom, boom. Let me share this screen. All right, I shared this tweet over the weekend. We had the Financial Times release a tariff retaliation news from the EU to Trump. 93 billion euros in retaliation to Trump's Greenland threat. Now, I don't even know, is he actually looking to invade Greenland, or is he looking to buy it? Like, I thought he was buying it, but then now there's talk about some invasion. Denmark is sending troops over to Greenland. I don't know, but it's causing a bit of turmoil. And also the Davos meetings coming up that's taking place in the EU. So there's a bit of talks going on there. And Trump actually did go live around 10 o'clock. Sorry, not 10 o'clock. I think it was 1 p.m. White House press release. I'm going to play a little bit of a clip there. He made an interesting comment on there in case you missed it. And everybody said all those year-to-date screenshots, poof, gone. I'm sure a lot of them are gone today. I mean, like there was pretty crazy rallies in the earlier this year or in the last couple of weeks. A lot of these high beta stocks went parabolic. And now, not so much anymore, getting a bit of a pullback. I would still argue that some of them are up pretty nicely still. but we'll see. But most of the time you've seen that these basically politically driven headlines create some buying opportunity for some positions here, right? So I think we saw that obviously in April. We saw that happen again in November, and then now looks like they're happening again. I mean, is this we're in a strong bullish trend for the S&P 500 for the market? I mean, is this really going to rattle things up? Or are we going to see another 23% bear market like we saw last April? I don't know. Who knows? But we do know that today's Tuesday, and tacos technically do get served on Tuesday because it is Taco Tuesday. So let's see if we're going to get a Taco Tuesday. Can't really comment on and see if we're actually going to get that. All I can do is look at the technicals, and it's not looking so hot right now. So are we going to do some hedging into the close? I don't know, man. We'll see. We'll see what's going on. Ray, Wolfpack, what's going on? Port's gone red, bro. Yeah, dude, the port has gone red for a lot of people. That's for sure. But you got to maintain the conviction in some of those stocks. What's going on, Carolyn? How are you? Pasta Salad. Oh, that's a pretty dope name right there. Pasta Salad. I like that right there. I like that. All right, so we're gonna stop the stream over on my YouTube channel. Want you guys again to tune into the Wolf_Financial. Link is in Twitter as well. But I'm going to be stopping the stream over on my channel in 5, 4, 3, 2, 1. Go ahead and join that link over there. All right. But for the rest of you G's, for the rest of you viewers out there still tuning in, let's move on with the show. All right. So there was a little bit of a commentary from Ray Dalio this morning. This would be my first time watching this video, so it'd be pretty interesting to see what Ray Dalio has to say. But if I could recall, Ray Dalio has been bearish for quite some time as far as the new order. We do get this move every about 40 to 50 years, maybe 70 years, where Ray Dalio does discuss a super cycle that happens in the market. He actually had a really good book. I would recommend reading that book. I mean, it's not really a book; it's like a textbook. But New World Order is the book that he did release. But I'd recommend checking that one out. In fact, he did have some commentary, like I mentioned this morning. Let's go ahead and check out that commentary. It's like a 7-minute clip. I'm not going to play the whole thing. I'll just play a little bit of it right here. So we got it going on right now.
This hour with Bridgewater's founder, Ray Dalio, author of multiple books, the latest of which is How Countries Go Broke. We've been having this conversation here at Davos now for many, many years. It's great to have you here. I want to actually just launch into the same conversation we were having basically during the commercial break, which is you've been talking for a long time about a breakdown in the world, a breakdown in societies. Joe had asked you, are we there yet? And you said, yeah, we're here. It's happening.
Let's step back from the sensational and be clear about what I mean. The monetary order is breaking down. Okay. What I mean by the monetary order is that fiat currencies and debt as a storehold of wealth is not being held by central banks in the same way, and that there was a change. The biggest market to move last year was the gold market, far better than the tech markets, right, and so on. And the U.S. markets underperformed foreign markets because of the fact you could see it in the numbers of the central banks and so on. So let's just look at the fact that on the other side of trade deficits and trade wars, there are capital and capital wars. And so as we're looking at that, and you reported what the stock market and so on, but you didn't report that the gold market is also up 3.
We did say that earlier this morning.
Okay.
It's up to
but
record levels again, and silver.
Is you look at what is happening and why it's happening and who's buying it. So let's just take a moment on that capital war issue, okay? We know that both the holders of U.S. dollar denominated debt, which is money, and those who need it, the United States, are worried about each other, right? So if you have other countries who are holding it and they're worried about each other and we're producing a lot of it, that's a big issue, right? So you have to explain what is going on with fiat currencies, generally speaking. And now if you take the conflicts, you can't ignore the possibility that capital wars, in other words, maybe there's not the same inclination to buy U.S. debt, and so on. We at least need to talk about those possibilities and find out who is buying and selling what that is behind these market movements.
And who do you think is behind it?
Well, it's known. It's very clear. You're seeing both the central banks. I can take you down to the specific central banks and what they're doing. Okay, they are because they're. What is money? What was
We're
money?
increasingly buying our own money. That's the.
I like how he's really commenting a lot on central banks, on how they've controlled, I wouldn't say world order, but controlled monetary order for some time. And this new order that he's talking about, I'm actually going to break up an image here. I'm not going to play this for too long. You guys can always check it out on YouTube if you like. But it's come to a point where central banks can't really control the monetary environment, or they're losing control of it. And this loss of control is a cascading effect or domino effect that's leading toward revolt, anarchy, and of course, the new world order that he discusses. I'll give additional commentary on that one later. Let me just continue this one for another minute or two.
That's the lesson of all this.
And the other countries' central banks and sovereign wealth funds and others are buying gold, are buying these assets as a diversifier. Think of it, gold is not a metal to speculate on. It's the second largest reserve currency. It has been the reserve currency, okay? So there's a money, and we're talking about, it's common conversation about what is money. Is it Bitcoin? Is it digital? How does it work, right? So we need to talk.
So this is basically the whole theory about losing the world's currency, the world's central currency, which is the U.S. dollar right now, and we are obviously having this deflationary effect of the U.S. dollar, or just depreciation effect of the U.S. dollar. Today, the U.S. dollar, I believe, is trading around 98.6, right? And this has been happening for some time. We topped out in the U.S. dollar. Oh, wow. The US dollar was around 110 just a year ago. I didn't even realize that. But basically, we topped out back in 2022 when we increased rates at the fastest pace ever in history. The US dollar was around 115. And now the US dollar index, which is basically a basket of the US dollar index is basically against the yen, the British pound, the euro, as well as the Chinese yuan. And if these other currencies or these other currency pairs get stronger against the US dollar, that ultimately is going to bring the DXY down and the US dollar index down. But also you have another correlating effect as well with gold that RYAAY Dalio mentions on. Gold is up about 3.7% today. It's just continuing to be bought up. Like it's not stopping. Oil is dropping as well. So of course that petrodollar that gets talked about a lot is becoming a lot weaker. And that pressure is coming, I would say, a lot from these macro events. Is that you have Venezuela basically releasing all this oil after we basically took leadership there. You also have all these partnerships with the UAE, and basically a lot of the oil gets controlled over there. And Trump is obviously talking to those people to get them to produce more oil at the end of the day. And that's why they're investing in these. Like, I don't know specifically the details of what everybody's doing, but like Trump is going to these places that produce a lot of oil, so he can increase the supply of oil. And as you increase the supply of anything and decrease the demand, the price of it comes down. And ultimately, the price of oil does dictate a lot as to where inflation is. Trump's goal is to basically grow ourselves out of our debt. It used to be we're going to be collecting a lot of income from these other countries with tariffs, and we're going to decrease rates and so on. That's how we're going to decrease the debt. But that no longer is the case. The case now is to grow ourselves out of the debt by increasing the rate of GDP, decreasing inflation, so we can therefore print more dollars and do more spending, and therefore no longer have the trade deficit, which he's saying that we're not going to have next year, which is it's a pretty far stretch. But anyways, you guys can check out the rest of that one online. But I definitely am seeing this in action. I actually want to share this this image over here as far as world order comes from RYAAY Dalio. I just want to open this up. Yahoo released an article on it. 5 years ago, but a lot of this stuff is still relevant today. And Ray Dalio has been basically pounding the table on this changing world order time. But as we start to get the fiscal stimulus and all this stuff happening, it does increase it. But also, I made a post over the weekend talking about the wealth gap, right? So you've had someone mention it on Twitter. I forget the gentleman's name, but it was a very interesting chart that we had. But first, this chart I want to share is this is the typical big cycle behind empires' rise and declines. This is kind of what Ray Dalio talks about in his book. Again, I would recommend reading his book. It's actually really good. There's a lot of graphics in there if you're not really like a text-only person. There's a lot of visuals in there. It makes it a bit easier in the eyes. And what we're seeing here is that you have your start of your new world order. Prices appreciate, risk assets appreciate, and you have pre-prosperity, productive debt growth. So this is like after World War II, right? Where there's peace around, maybe like 1970s, toward the end of that. You have a debt bubble and a big wealth gap. This is kind of where we are right now. I'd say like we're like right around here. According to Ray Dalio, this is where he says we are right now, right? And since 2008, all right, I think what Ray Dalio would argue is that was kind of like the top of the cycle, 2008, right? So it's not necessarily like stocks dictate where we are in the cycle. It's more where we are on the macroeconomic scale, right? So 2008 was like, boom, we're going to have all this stimulus injected. And since then, we've been injecting a lot of the money. Basically, the Fed, I would say, is no longer an independent entity. The Fed is more of basically just there just to print money infinitely. I mean, obviously, they're supposed to keep unemployment at lower levels or full employment, as they say. They're supposed to keep inflation under control. But is that really the case lately? It doesn't really seem like that's necessarily the case. And that's kind of what Ray Dalio is pointing out with this New World Order, is that there was a point where the Fed was all about full employment and maintaining inflation. And since 2008, that kind of changed. We already reached the top. So now we're having printing of money. We're having credit. We're having debt bust. We're having economic downturn, right? So this is the big question. Are we in an economic downturn or not? Let me bring up the tweet that I shared this weekend, kind of commenting on that one. Hold on. I should have actually saved it. Where is it? There we go. All right, so Michael Zandi released this chart, and I think that there are more than a few people that are commenting on Twitter, namely Chris was commenting as well, where you have the economy is increasingly K-shaped, right? So you have your top 20% basically taking up all the consumption in society, or at least most of the consumption in society. And then you have your bottom 80%, which is 80% of the people. Like, that's a large population, and that's starting to be less of the consumption. So there's clearly a lot of spending being done with GDP around 4%, as it is today, right? Multi-trillion-dollar economy, GDP growing at 4%. That's a big move, right? Especially for the largest economy in the entire world. And the issue is that the bottom 80% is suffering with higher prices for goods that they need to survive, right? So fortunately, I would say that I'm not suffering nearly as much. And I'd say a lot of you people are not suffering either, because you're buying stocks, right? You understand that in order to hedge your dollars, you need to buy stocks. You're basically converting your dollars into risk assets, because those are appreciating, whether it's real estate, which is more illiquid, or whether it's stocks, which is more liquid, right? But the bottom 80% doesn't really own that stuff. And that's kind of what I'm saying in this post over here, in case you guys want to check this out. All right. You can go ahead and check that out, but this doesn't look like it's going to end anytime soon. I mean, like, would you buy this and sell this, or would you buy this and sell this? Like, it would be very difficult to do that, because if you look in the last 3 decades, right? If you bought here on this green chart, you'd be making money, or if you shorted here in this blue chart, you'd be making money, right? So it doesn't look like it's ending anytime soon. And you have like these peak periods right here where you've had your stimulus, right? You've had the massive injection of liquidity into the stimulus, which had that income cap, right? And it worked for a minute, and then it came back down. And then 2022, again, worked for a minute when rates went up first and the stock market dropped. So basically, whenever you have the stock market drop, this wealth gap narrows, right? So what does this mean? This means that in order to get this back to 50-50, we need to have a massive correction. That's not just in the stock market. That's in all risk assets across the board. That's with real estate. That's with everything, right? That's the only way to bring this here. Unless, Ray Dalio comments on this, you have another world currency like digital assets, right? Or Bitcoin. If Bitcoin becomes the world's currency, that in its own argument could be controlled strategically, right? So I don't want to get into the whole dynamics of that, but that is kind of the idea behind it. Now, is that going to happen? I don't know. I would think that, and the author of this chart, Michael Zandi, thinks so as well. In fact, let's see here. I tagged him. Mark Zandi, sorry. Yeah, so you're really going to have a revolt if this continues, right? So if this all continues, there's going to be a revolt. And that's what Ray Dalio has in his chart. You have revolt and wars, debt, political restructuring, and then New World Order. I don't think we're going to get down here to New World Order without having this. And unfortunately, that's going to be the case, right? Because if you're the bottom 80%, right, you're suffering. There's people who are living to paycheck and working 2 jobs every single week just to get by. And then there's people who own a bunch of stocks, who own NVIDIA, who own Micron and SanDisk, and they don't need to worry about working. But in order to get there, you, of course, have to start somewhere. But if you don't have anything, if you have to work 2 jobs just to get by, how are you supposed to buy stocks? How be like, oh, let me buy NVIDIA calls instead of feeding my family this weekend. It's not really a choice, right? Maybe for some of you it's a choice, but not for me. It's not really a choice for many. So that's really the issue and where it leads all of us. Like, is this going to continue? And that's what Ray Dalio comments on. He thinks this is the beginning of it. So that's pretty interesting. I would really recommend reading more of that. What are we looking at with lay markets? Qs are trading at the lower day, SPYs at the lower day. Yeah, this is not looking good. This is not looking good. This is a pretty brutal side. It kind of looked good for a minute, and then it just, but that is a massive gap down, guys. Like, this is, we have not had a red day like this in a long time. If I look over here, we basically gapped down 1.5% on the S&P 500. I don't think we've gapped down like that in a long time. What's this over here? Yeah, that was like that was like a 43 basis points gap down. I would say this is probably the closest one. Yeah. So November 20th was when we gapped down pretty big. What's this over here? No, that's not a gap down. It started up at the top. This wasn't even a gap down. This happened intraday. Gap downs are pretty big because when gap downs happen, why did it say connecting channels? Did I lose everyone? Okay, I think I'm still here. Why did it say connecting channels? Anyways, appreciate all 68 of you being on the Wolf Financial channel. Can you guys just comment below to make sure you're still here? Because I feel like I got like a warning message that you're trying to connect the channels. I want to make sure everyone's still here and I didn't lose everyone because of the boring discussion. This is a boring monetary policy is just very interesting. It kind of dictates where everything's going to go. At the end of the day, it's very difficult to time these things because if you thought you were trying to time it in 2008 when you sold, you would be like really missing out. So it's obviously very difficult to time it. Warren Buffett is about 33% cash. So like, I don't think he's trying to time it. He's just stacking cash and stuff. So we'll see what happens there. But I don't know. Pretty wild time to live in. Pretty wild time to live in. Yeah. So if you are on YouTube right now, go ahead and check us out on youtube.com/@wolf_financial. You can interact with me on here, ask me questions while I'm doing the live streaming. We'll be happy to answer any questions you guys have. Oh yeah. Okay. Dude, you guys are all here. Appreciate you guys. Appreciate all 66 of you people on the Wolf YouTube and everyone else on Twitter. All right. So let's move on with the show. I mean, I guess at least we're today, like I did comment on this earlier as far as like the fake bear market. I mean, the charts don't look good, but I guess some of the stuff doesn't look as good as it did this morning. This morning things look a lot better, but Zeta has went red, unfortunately. A lot of these stocks have turned red. Iran is down 6%. Kratos is down 3%. That was actually green today. AMKR still up 3%, which is good. Novo Nordisk is something I keep my eye on over here. I might be getting in a swing position here in Novo Nordisk because this chart looks pretty good and constructively. It's above the 200-day moving average, but I'll comment on that one later. Or you could just follow me on Twitter. Samsolid 57 on Twitter. Oh, wow. We're like kind of selling off here. Yeah, we have not had a day like this in a long time. In fact, we're going to be closing below the 100-day moving average here on the Qs if we maintain this bearish move. Crypto is just not good. Like, I don't know, man. This is a massive rejection of 100-day moving average. If I was to buy like calls in crypto or something, like I would really wait. I would not buy this chart. Like this has not gone anywhere for the last 2 months. I mean, there's no reason to wait. Like, well, there's no reason why you would not wait. I mean, like you're trying to catch the bottom that you were wrong. But if you wait, it's better to be patient when it comes to this stuff. I mean, unless of course you're just adding to a HODL portfolio in crypto, which I do have, but like I haven't added in a while. This chart doesn't look like it's going to be bouncing anytime soon. I mean, you might get these like random upswings here, but we had higher lows and higher highs, but that completely got invalidated today. Actually, yeah, it got invalidated today. And BMNR does not stop going down. So that's pretty scary. But then on the other side of it, it's like, dude, people are buying the dip in AppLovin. It's only down 1%, but this thing was down 7%, but it's still pretty expensive. AppLovin is not a cheap stock. It is not a cheap stock. So if you're going to be buying this over here, you better be holding for a long time or you better put a stop. All right. But this chart does not look bullish at all. Like I don't see any reversals in this chart whatsoever. We're not near any of the moving averages on a daily basis. On a weekly basis, we're not near any of the moving averages or critical points. On the monthly basis, we did bounce off the 9 monthly EMA. But I mean, dude, like this could easily just fall down. If you're really going to trade this thing, like maybe if you want to go long here and then stop yourself at the low a day, but it'll be very difficult to do that if it gaps down overnight and then you'd be losing out on a trade there. But I would not get into this without a stop. So yeah, pretty difficult. Oh, okay. Getting a little bit of a bounce. It's nice. Yeah. So, I mean, the themes still look good. Like it doesn't look like AI is really ending anytime soon. In fact, Andy Jassy had an interview this morning on CNBC. I'm going to go ahead and play that for you guys right here. Doesn't sound like AI is stopping anytime soon. In fact, it seems like it's reaccelerating as far as that goes. Hold on, I got to open up the clip here. One sec, guys. There we go. Damn, it must be cold in Davos. Thank goodness I'm not there. Thank goodness I'm in hot Southern California where I have to pay taxes with like 50% of my income.
And with Amazon CEO Andy Jassy and asked him about the immense demands of artificial intelligence like computing power and grid power and how tech giants like Amazon are planning to meet all those demands.
It is so unprecedented how much compute is being consumed right now. You just have to only look at how much, how much power is needed, how many data centers are being built. There is the AI labs are consuming gobs and gobs of compute right now. And so those AI labs believe they have opportunities if they train models very expansively to keep changing the intelligence of these models. So they need a lot of compute, but they need money for the compute. And so they're trying to find ways to fund that compute. And I'd say a lot of the companies who provide that compute want to serve those customers and then have opportunities to also invest in those companies as those companies are looking to find ways to fund what they're doing. And I think those companies are impressive companies. So I think when you look at a company like Anthropic, a company like OpenAI, I mean, these are unusual companies who've been building amazing models for 10 plus years and are reshaping the way people use applications. And so I just think it's a function of the time where tons of compute are being asked for. They need ways to fund it. Companies have opportunities to invest in companies. Those companies are impressive companies, and you're just seeing some of that. But I don't know if that'll continue or not.
Do you think it ends well?
I think it could end well. I mean, I'm saying anytime you make substantial investments, if you look at the history of M&A and investments, not all of them are successful, and the hit rate is pretty variable. So I think whether the investments end well or not, we'll have to see. But I do think the companies that we're talking about just in the last few minutes are impressive companies.
Well, OpenAI, for
All right.
instance, I think they've signed deals.
He clearly has nothing good to say. Amazon owns part of Anthropic. Hold on. How much Anthropic does Amazon own? Amazon owns, it says here, about 8% of Anthropic. So of course they're going to be, wait, they don't own 15 to 19% of Anthropic. Oh, maybe because they raised. Okay, let's just say Amazon owns about 10% of Anthropic. Why would he not be bullish Anthropic? OpenAI, all these investments they're doing, I don't think they're going to do good. Anthropic, though, really great company, right? It's okay. You're trying to talk good about your bag, right? Like, okay, it makes sense. Like I wouldn't be out here talking crap about Zeta if I didn't own it, right? So someone asked earlier, oh, that's all the clip that I'm going to play. I don't think we need to play anymore. We kind of get the gist of it. Someone asked, yeah, so what are my thoughts about Zeta and Path? I mean, I've already taught about Zeta ad nauseum. Path, I'm bullish on Path. My problem is the chart just does not look good right now. So it's very difficult. I've had a strategy that I've been employing in my portfolio for like the last 5 months, and it's been doing pretty well, where I don't want to be like holding stocks through like massive drawdowns unless it's like a core position, right? So core positions, I'm bullish on the thesis. I'm bullish on the fundamentals. I'm bullish on the financials. I'm bullish on the secular trend that it's in. I'm bullish on all that. The problem with having core positions in everything that I own is that if that happens, then I'm not going to create any alpha. If you have stocks like right now, the stock market isn't everything up market. Only certain things are going up. So in this case, I am bullish Zeta. That is a core position. Even if we go through some sort of drawdown, I'm probably going to continue holding on to Zeta. Maybe not. Maybe like let's say Zeta hypothetically goes below a lot of moving averages. I'm probably not going to like add to it dramatically. I'm going to like wait to get an opportunity to add to it. It doesn't have to exactly be the bottom. With Pat, it's not a core position. All right. And I'm like toying around here. Like actually, let me just bring up the chart right now. Yes, that's correct. I'm doing the stock talk method, not bag hold. I don't want to bag hold stocks, right? So everyone has different like companies that would constitute their core holding based on their conviction, right? So the way that stock does it is that he has his core positions that he would not sell, right? And Amazon is a similar position. Like I've had Amazon for like 4 years now, and I'm not going to sell it, right? And he's had Tesla since like 10 years ago, right? He's not going to sell it, right? So like you have your positions that you're just going to hold on to and you're not going to sell. For me, it's like my core position right now is like on semiconductor, which is doing pretty well. And the chart looks really good. And Zeta, those are ones that I have that are core positions. And there's some positions that other people have given me ideas about, and I look into it and like I get into it, but like some of them are just like, this won't be a core position if it just like falls, right? And because of the fact that either one, I already have exposure to this theme, or I already have enough exposure to that sector, or maybe because it's more of a trade, and if I get stopped out, I get stopped out. So Path was one where the chart looked really good. Their earnings look really good. They're probably going to reaccelerate revenue. It's part of a secular theme, but the issue with Path is that they're not exactly, they don't have like they don't have a massive moat, right? Robotics platform automation is a very competitive sector. Like you can't just own this sector forever. You have to be constantly innovating, constantly expanding contracts with enterprises and everything. It's also a software stock. Software in general has not been doing good. So it's actually pretty extraordinary to see Zeta is like actually holding up pretty nicely, even after this massive sell-off. But Zeta, I would argue, is quite different from Path, right? Path is providing the development of AI agents. Zeta does own the AI agent, and they're more in the marketing platform, but they also have a lot of partnerships with a lot of large enterprise companies, including OpenAI, right? So it does have a bit of cushion there. is there a real world where I will ever sell Path? Well, I mean, the chart doesn't look good. It doesn't look good at all. It's below the 100-day moving average. I was actually toying around selling it last Friday and last Thursday. And I've been like kind of, I honestly, like part of my position I got stopped out on, but I put it back on and like I'm still here. And like, okay, this looks like it could be a reversal, but I think this is entirely dependent on the stock market. But I would say that down only 70 basis points on a day where the Qs are down 2% kind of does show a little bit of a bottoming out effect or a little bit of selling exhaustion here from up here, right? The fundamentals look good, but the thing is that this isn't even a massive position of mine, so it won't be like a detrimental effect if it drops a lot. A company like Zeta is a pretty big position of mine, very big position of mine. In fact, this has contributed to a lot of my performance this year so far. Same with On Semiconductor, same with AMKR, same with Lemonade as well. Like a lot of these companies have really brought in a lot of the alpha that it had this year. Lemonade, it is a core position, but the problem is that this has ran so much since its lows. So there's other opportunities that are still in the market. So like if we did get a pullback, I would not add to Lemonade, but I'll just hold on to my position and just not sell it. And honestly, the portfolio has grown to a point where it's like this is no longer a decently sized position anymore. I mean, yeah, it is a decent sized position, but it gets all on shares, so I'm just going to leave that. So I think there's no more opportunities come to the market. So now when it comes to Path, if we get some pretty nasty moves to the downside, I'm probably going to cut Path, right? But I'm not going to sell Zeta. I'll look to add to Zeta if we do get some meaningful recovery. But I mean, S&P 500 just does not, this just looks like a really bad chart. Like we need like a crazy move back upwards to restore some sentiment and price action here. If you look at this 9 EMA over here, over 21, so the dashed lines are exponential moving averages. This is starting to curl down. When the 9 EMA crosses the 21 EMA, that is a pretty bearish signal, right? So we've seen it here where the 9 EMA crossed the 21 EMA, and then we had much further downside in the S&P 500, right? So it happened here, close here. This was like your confirmation at the close. You didn't really need the confirmation because after here was probably a signal and then it gapped down. But let's just say right here, it went down another 2%, right? So they 2% is not a lot, but a lot of stocks fell a lot between this week in November. They fell a lot. Yeah, I'm still in Rubrik. I've made a decision. I'm not going to sell Rubrik. I don't think. I mean, I've been in Rubrik since a $30 range. Actually, my lowest ad was like the all-time low, right? So Rubrik. This is another chart that does not look good. But it's a core position, so I'm not going to sell it, right? So that's the decision you have to make. I've done extensive research and due diligence in this company, and I was adding a lot down here, and we've never seen anything close to that since then. So this is something that Stock Talk talks about as well, whereas like if you have a very low cost basis, I'm still up a double on it, right? So the same thing with Grab. I'm not going to sell Grab. I've already made that decision. I'm not going to sell it. I don't know how this is up 3% today. Like, don't ask me how. It's up 3%. I mean, I'll take it. I'll take 3% of Green Day and Grab. To all you 74 people, 74 beautiful people here on the Wolf Financial YouTube. I'll take it. I mean, I'm honestly surprised how the Qs are down 2% and Grab is up 3%. Like, did someone mess up? Did someone hit the buy button instead? Did a whale hit the buy button? It's had a massive sell-off, so maybe just a little bit of exhaustion today, so we'll see. That's a core position. Robinhood is a core position, right? So Grab, my average is like 385. I would have never guessed that we'd be in 450 right now. Like I would not have guessed. Even like last April, we went as low as, oh, wow. I didn't even notice that we were in the $3 range last April. Wow. I guess that's just how much I didn't really pay attention to it, but I still held, right? So, I mean, you got to kind of figure out like what your core positions are and then just add to them when they're high conviction, right? So AppLovin, this is a great trade that I had when it was down here in April, and I sold it like after it got added to the S&P 500. So it was like here and like it rode up and I started trimming it a lot and I completely got out of it like at 630 or something. And then it was like down here and I was like, ooh, should I add back into this position? I didn't. And then obviously I missed out on it, but like here we are again. So How many core positions do I hold? I gotta kind of count that. I think I maybe have like 5 or 6 core positions, but like if you like really want to think of like big core positions that I have, it's like Amazon's a massive core position. On Semiconductor is a massive one, Zeta is a massive one, Ancor is a massive one. The rest, like I do have core positions like in Rubrik and Grab, but it's like when you already built your position and you're holding it for a long period of time and everything else in the portfolio moves up a lot more, then that core position is still core. Like you're still not going to sell it, but it's small to a point where it's like, it's not that big of a position to make a big difference if it drops like another 30%. Like for example, Rubrik, I think is like 3% and Grab is like around 3-4%. If Rubik goes down to $40, that's like what, a 30% haircut. Like, is it going to move the portfolio that much? Not really. And if it doubles, yeah, it'll move a little bit. But if Rubik doubles, the whole market's going to be up. So like, is it really going to like make a huge difference? I don't know. I mean, these are the sort of things, but like, especially when the market like pulls back like this below the 50-day moving average, like I'm looking for things to sell that I don't want to hold. And a lot of those are just non-core positions. And I'll keep you guys updated on like what those might be, but Grab is on the list. Sorry, not Grab. Path is on the list to be one of those things that I cut. You know, there's nothing wrong with the company. The fundamentals are good, but like the stock market just hates the company, right? Like you can't own everything. And I'd rather concentrate, if anything, concentrate in things that are working, right? And Path is just, I don't know. I would have never thought it'd be back down here after its earnings, after the massive move up. I would have never guessed, but here we are today. Like the market is always right. The market is always right about everything. And you know why? Because the market is dictating the price of an asset. And you have to admit when you're wrong. And even if I'm wrong and I end up being right later on, but I'm not in it, so be it. But I'd rather cut things that I'm wrong on before they get more wrong, right? So there's a lot of stocks that have continued to be wrong. I'm not in Duolingo, but let me tell you something. The market thinks you're wrong in this, right? If you're bullish Duolingo today, the market thinks you're wrong. Oh, so, you know, what if the market just doesn't realize it and then Duolingo is a $10 trillion company? Well, if it's a $10 trillion company, then I completely missed it, right? So I sold Duolingo like in the 320s, right? I remember I sold it here. And it went up to like near 350. And I'm like, oh, shoot. But then I didn't go back in, right? And okay, I'm happy I didn't go back in. I sold Adobe last week at 206. Sorry, 306. And it's low now. Now, I could be wrong. I could continue to be wrong and I'm not in it anymore. And then I could end up being right, but not in anymore. And Adobe is at $500. Let me tell you something though. If Adobe's at $500, my other positions will be up more. So I don't think there is really a world where AI just goes in the gutter and Adobe is at $500. Like that's just not, I don't think that's going to happen. I think it's a very low probability. I have to take a look at my portfolio again and give you this more information. I'm putting something together, but I've really just been focusing more on not making a position like over 10% out of the gate. I'd rather grow to a position that's over 10% than anything. And I've found more success in doing that and more success in concentrating. Because if you earn so many things, how do you keep track of it? And on top of that, the market is dynamic. The market changes every single day, every single year, every single decade, right? So things that worked back in 2022, which were dividend paying stocks, safety stocks, oil worked in 2022, Enphase worked in 2022. And they're clearly not working today, right? Actually, no, oil stocks are kind of working right now, but a lot of things didn't work in 2022 that are working now. And a lot of things that worked last year are not working now, right? So data center stocks, right? I mean, these companies have like, they've bounced a lot, right? Someone mentioned Sky T. Damn, dude, I miss this one. I miss Sky T. I was on here talking about this thing when it was $16. Good Lord. Hopefully someone got in. Hopefully someone got bullish and they got in when I was talking about it, but I wish I was in it too. A lot of these data center stocks, Nebius was at 110 last Friday. Now it's below $100, right? I still own Nebius, right? But I would not be adding at 110. I would wait for a pullback if I really wanted to get in. And I would even question getting it right now because it's back testing the 100-day moving average. Maybe, I mean, this might actually be a good setup because at the 100-day moving average and then it gaps up tomorrow. We'll see what happens there and bounces. But if I were to be trading Nebius, if I wanted to, I would buy here and then I'd stop myself off if we open or close below the 100-day. But I'm not doing that. I'm not getting into that. But I already have Nebius at $25. So why would I need to add it? Have you found any energy plays that could benefit from AI? You know, I think my specialty is really around software, and I do like semiconductors here, especially a lot of hardware plays. So energy is just very difficult to get into. I know some of the boys, Chris, Matt, they're part of like VG, and they're part of like, VG and Next. And this is more natural gas, because if you really think about it, you have a lot of nuclear being talked about today, right? The nuclear stocks I would buy are not Oklo. The nuclear stocks I would buy is CEG, right? So CEG, actually, this chart looks pretty bad, but CEG is actually producing, they're turning over profits from the nuclear energy that they sell today. And it's not just nuclear energy, it's other energy today, but they also have the contracts that are existing today with large companies like Microsoft. Oklo is like, I don't want to talk crap about Oklo or anything, but it's pre-revenue. Like there's no revenue. So what happens if, because there are risks in the stock market. There are complete risks in the stock market. Just because these mega caps are investing hundreds of billions of dollars into AI, it doesn't mean the market's going to keep going straight up from here, right? I believe that the market will be higher in the next 10 years. I do. But I'm not going to discount that we're not going to have like bear markets until then. Like we're probably going to have like 2 or 3 bear markets until in the next 10 years. And they're probably going to get bought up. How fast they will be, who knows? But like stocks like Oklo are going to get sold off pretty hard if that does happen. In fact, I mean, look at these things. Like a lot of these energy stocks are down like 4%. So if you're going to buy one, you better know which one you're going to buy. I haven't done enough research to know what I want to buy. But Bloom Energy has already made a massive move, right? So I remember that when this thing just a year ago was like here in the $30. Now look at this thing. It doesn't stop going up. This one's a bit different from an Oklo or whatever. So, you know, that might be something to look at if you're looking at energy stocks. But I can't really make any recommendations. What is working right now is like CVX. CVX and yeah, that's all the way up at 165 and ExxonMobil. These are some energy stocks that are working too, but this is obviously centralized around oil. So, you know, is there one that could work? Yeah, maybe, but I haven't done too much research to even understand that entire sector. All right, so wow, we actually went a long time on that one. I didn't think I was going to go a long time on it. All right, so Elon Musk and fun segment, Elon Musk and Ryanair. So, dude, I don't know like what is happening with Ryanair, but ever since this tweet came out, let me share my screen. So messed up. So messed up. All right, so cheers, Ryanair. I didn't ask for a private suite, and this person took a picture, or she took a picture. I was gonna say this guy took a picture, but it's obviously a girl. And they basically got some seats. So Ryanair doesn't have like first class or anything, or maybe they do. I don't know, but it's like one of those cheap airlines. I wouldn't categorize it as like a Spirit or Frontier if you're in the U.S., but they're not really known for like super luxury airlines. And this person's like, hey, I got a extra legroom seat and I didn't even pay for it. So cool. And then Ryanair says we didn't ask for a picture. Like, why would you do that? Like, why would you say that to someone who is praising you? Like, I don't know which intern is controlling the Ryanair account on Twitter, but like, this is totally messed up. So this kind of went viral for a minute, 10 million views. And Elon Musk came over here and he started talking about buying Ryanair. I just thought it was funny because it's like, dude, like, why? Like, Elon Musk is the richest man in the world. He can easily buy Ryanair, easily. I don't know how bullish it's going to be for Tesla if he does buy Ryanair, because that means he has to sell stock. Because I don't think Elon Musk has $5 billion in the bank. He has to sell $5 billion worth of stock in order to buy Ryanair. But, well, Twitter seems to think he should buy it. 41.5 million views of this. You have 350,000, no, sorry, 750,000 people saying he should buy it. I would not mess around with Elon Musk. And then I don't know what Ryanair was doing, but they came out with this post right here. Well, not a post, but Ryanair CEO to address / undress. Are you trying to provoke him? Elon Musk Twitter tantrum at Dublin conference. Dude, okay. The one person you don't want to piss off is the richest man in the world, especially the richest man in the world who gives no Fs, right? Like he does not care. Like, does Elon Musk care what people think? He doesn't. He's never has, even when he was not filthy rich. He certainly does not care now. And I don't know if it's just trying to, hey, no problem. I'm glad I make you feel like royalty. That's what I'm here for, baby. I don't know. I don't know what these Ryanair people are saying. And then I hope you guys like the thumbnail for, you haven't put on the thumbnail. I hope you guys like this thumbnail. It took a little bit I was actually supposed to work out, but then I created this thumbnail instead. It's just like, it's funny, Musk. Oh yeah, this is Gemini generated. So I generated a Gemini thumbnail, or I generated, the thumbnail's not AI generated. I create these on my own, but some of the images within it I do. Like this isn't the picture of Elon Musk tossing out Twitter sinks. Like I generated this in Gemini, and I threw the Ryanair thing in there. It's like, I don't know. Maybe it's a masterpiece. I don't really care, but I got the idea from this. It was just funny. It was so funny that, like, I don't know why Ryanair is trying to come at Elon Musk. Like, just the last person you want to come against. Like, even Trump went against Elon Musk, but I don't know if that was Elon Musk bending the knee, but there clearly is no more beef there anymore. And then Michael Leary is sorry, I don't want to say this word out loud. Michael Leary is RETWAT, who needs to be fired. Put him. It's like, don't mess with Elon Musk. I'm not an Elon fanboy. I don't even own Tesla, but we're on his platform, right? So why are you messing with him? Like, I don't know. My guess is that if Elon Musk buys Ryanair, he's going to buy it at a premium, which means the stock is likely going to go up higher, which means that the CEO actually makes money, which means that there's kind of a motive here for Elon Musk to, for the CEO of Ryanair to talk crap about Elon Musk. And I don't know how it was for their stock, because this is when the tweet came out at the beginning of the year, and it's down about like 10%. But if Elon Musk buys it, the stock's going to be up here. I am not putting a trade on that one, because I would rather not be on the other side of this one. It's fun entertainment, though. Entertainment is fun. All right. So next thing we're going to talk about is AppLovin. So AppLovin had another short report. We're going to go over this one real quick. In fact, we're running short in time here at the end of the day. AppLovin, there's another short report that came out. It's actually really funny because AppLovin is down 7% earlier this morning, and now it's like 1% down, which is laughable. Like the market clearly does not want to sell AppLovin. But AppLovin has went through so many short reports, and they took another stab at it, right? So AppLovin's been through 3 short reports in the beginning of 2025, especially the big one from Muddy Waters. And that one actually took the stock down like $220. And I took advantage of that one and bought AppLovin, because this is a ridiculous company. Like they have like 77% operating margins, and they have 67% growth. Like, why would you sell this stock, right? So why would I sell it? I sold it when it was higher. So, it's at a certain point, there's only so much you can make in a company. Like a 3-bagger is great, but like advertising is a very volatile industry. So just keep that in mind if this is a core position for yourself. So get rid of volatility if it does come. But they basically got accused of laundering money in Asia, right? So the person that's tied to these allegations owns like 10% of AppLovin. So there was a company that is accused of laundering money in Southeast Asia, and that gentleman owns 10% stake in AppLovin. So they just like followed the paper trail, and that's how they came up with the short report. In my opinion, short reports are always ways to profit off of for these companies that release the short reports. And they even say in the bottom of the short report, like, we may or may not own a short position on this, which they clearly do, and that they're not going to tell you when they get out of the short position. So they could have released a short report last weekend, or was it yesterday, and then covered their short when it was down 7% this morning. So they're already out of it. But then now the short report's lingering around here. Like, this is probably one of the highest short interest stocks out there. So it's like you release a short report, you short the stock, you release the short report, it drops 7%, you get out, you made your money, you don't really care what happens after that because you already had your position. But then everyone else who's reading this stuff sells AppLovin because they're scared, whatever. This would not scare me if I was an owner of AppLovin. This would be like ridiculous. I'd let price dictate what I'm going to do. And it has recovered tremendously since the low of the day. So I would not sell if I was an owner of AppLovin. But I mentioned some other tickets here, TTD, Reddit, and Unity. So Reddit also has high gross margin, high profit margins for an advertising business. And so Unity is getting there, but not as great of a profile. But I think the risk reward in Unity is probably a lot better than like a TTD. TTD is still an expensive company. The trade desk still expensive, even after a more than 50% drawdown. So like, you better have a good bull case against that one if you're going to buy TTD. But like, that was basically just a touch in this one. I mean, what's it at right now? It's down. Yeah, it's down like less than 1%. Like, it's a joke. Seriously, a joke. All right. So there was actually an interesting tweet from Heisenberg, our boy Heisenberg. The current TAM worldwide for content creators, aka creator economy, is currently around $200 billion. The TAM worldwide for content creators, aka creator economy, I had to mention it twice. It mentioned it twice. It's like totally threw me off. Brain fart. Next 8 years can reach $1.4 trillion. Ooh, 1.4. I had in my notes it was 1.2. I guess I was off by $200 billion. Whoops. You don't have to be 200 IQ rocket science inventor to create content either, right? So I create content, and I certainly don't have a 200 IQ, because I think someone with a 200 IQ would be saying Bitcoin's going to be at $250,000 by the end of last year, which clearly wasn't. So take that. Whoever is reading this, you can literally be the next 50K, 100K, 250K, maybe 500K income earner through creator content. Okay, so there is clearly alpha in this industry. Preface, I don't own BMNR. I am not buying BMNR. But this kind of does make me wonder here. You did have BMNR invest $200 million in Mr. Beast. So if this creator economy goes from 200 billion to 1.4%, that's a 7 times, right? In the next 8 years. So what is a 7 times CAGR in the next 8 years? CAGR for 8 years, 700%. That is a 29.68% CAGR. Right. Again, I'm not buying BMNR. It just like had me thinking, right? It's like, just because you have like a good idea doesn't mean you have to like buy calls in or act on it. Like, it's just ideas are ideas. But like, for me, this Bitcoin, like, I'll wait. If I'm going to trade BMNR, which I have successfully many times, I would not do it here. I would wait. All right. Maybe we'll look over that chart later on. So that's a 30% CAGR on potentially $200 million that Mr. Beast invested in, which are beating the stock market. Mr. Beast is arguably one of the largest and fastest growing content creator companies out there. My kids watch some of his videos, and I get strongly addicted to these things just by watching it. And I choose not to watch it because I don't want to be sitting there watching a video, right? I'll watch a video if it's good education, but like, I can't sit here and waste like 3 hours a day watching this stuff, right? My kids, different story. I mean, kids watch stuff, but like, I'm not letting my kids watch this for 3 hours a day. Like, that's insane. In fact, my kids don't even watch anything for 3 hours a day because that's just too much wasted time. Entertainment is good here and there, but I mean, these This guy has lots of celebrities on his stuff. He has lots of contestants on there. He's giving away money. And I wish I had enough money to invest in Mr. Beast, because I definitely would, but I don't. But I don't, is it really a bad thing if you see your company invest 200 million? I think but the biggest issue here, and I'm not going to take that away from people who are investing in BMNR or against it, because I mean, there was literally no talk about investing $200 million in Mr. Beast. So I think that's what kind of ticked off shareholders a little bit. In fact, one of the people, one of Amit's followers, where is she? Oh, here we go. I think the most criticism I saw was a lack of clear strategy and fumbled investors. The details haven't been agreed. Yeah, no, this makes sense, right? That wasn't really the thesis of buying the stock in the first place. So why are they doing it now? Are they desperate to get money off something? Do they not know what to do with their $200 million? Why didn't they buy back some of their stock? Or why didn't they buy more Ethereum? Are they saying that this is a better strategy than buying Ethereum, which is the bull case for the stock in the first place? That's a little bit of gray area. I don't want to comment on that one because I don't own it, but that is something to think about, right? Oh, wow. 136,000 views. That's awesome. Yeah, I think Tom Lee retweeted this one. But yeah, that is something to think about. But I mean, if you're bullish crypto and you really believe in that Ethereum is going to be the Ethereum network is going to be the backbone of immediate reconciliation of payments and settling of payments, then this might be your gateway. I think that would be the bull case for it if I did own it, but I don't own any right now. But this is just something to think about, which is pretty interesting. And lastly, I don't think I need to play this video on Micron CEO, but we did have the Micron CEO buy $1 million worth of stock last week. Where was, Micron rose 8% on Friday. Let's see here. They broke around $100 billion. Where was that tweet where he bought like stock? Oh yeah, here we go. He bought $800 million worth of stock. Oh, I'm sorry. That was not the CEO. It's the former TSM CEO. So he's a director of Micron, or he's on the board of Micron, and he bought $8 million worth of stock. I don't know what to make of this, but that would not make me bullish because someone else bought a lot of stock, because anything can happen. Just because someone buys stock, it doesn't mean the stock is going to go up. Now, there is only one reason why you buy stock, and there's many reasons to sell. In fact, a lot of people sell stock because that's their means of income, right? So if you have a lot of people who own a lot of stock and they need to make money on, they need to they need to live, right? They want to buy something, they want to buy a car, they got to sell stock, right? And for a lot of these CEOs and board of directors, they only own stock. So in order to go by in life, they have to sell some of their stock. So that's the reason why some people sell stock, or it could be anything, right? There's only one reason to buy stock, because you're bullish. Why else would you buy a stock? Why would you buy a stock unless you're bullish? Unless you're hedging, I don't know, whatever it is. But these directors don't necessarily do that. So that was an conviction, and Micron is actually trading a lot higher since that news came out. Micron does not stop going up. All right, so let's close it out here, guys, because we are heading toward the top of the hour, and I will not be doing the market close. You can tune into Amit if you want to check that one out. But yeah, Micron does not go down. How are we looking at this stock? Oh, wow. Lows of day. The lows of day. Down 2%. Yeah, we have not had a 2% down day in a long time. This wasn't even, you can't consider this a 2% down day because it opened up here. So this was a 1% down day. But I still remember this day. This is a very bearish move in November. And then it ripped people's faces off after that. Is that going to happen again? I don't know. I don't know. Even over here, middle of December, that was a 1% down day. This was a massive down day here. The Trump tariff tantrum, 2.7%. But we have not had a 2% down day in a long time besides that one day. So I don't know, man. This is pretty bearish. This is pretty bearish, in my opinion. Am I going to sell everything? No, I'm not going to sell everything. I'm not going to sell everything. I'm going to still wait for some confirmation here. Might cut some positions. We'll see. Yeah, all right. I guess I'm not selling path. Still maintaining some decent levels. I wouldn't be surprised if we bounce tomorrow. Like this is Trump could literally go on here and just like taco, and the market's gonna be up like 2% tomorrow. So I'm gonna wait and see. I'm not gonna short anything right now. I mean, you guys might, but I'm sitting pretty nicely in some cash right now, like about 10%. So I don't mind. And I got some swing positions that I could sell out of, if anything. But yeah, thanks for tuning in, guys. Appreciate you guys being here. Go ahead and like and subscribe the video on YouTube. Help out that algorithm. I know help out that algorithm. Go Indiana, and we'll see what happens with the. I'll be back on tomorrow. So, someone asked a question down here. What time and days? So I usually stream around 11. Not 11. I'm in Pacific time, so I keep saying that. I usually stream around 2:45 p.m. Eastern, and I usually end like around before close. You know, and I usually watch Ahmed stream after this. Ahmed's cool dude. I'm going to be at that meetup that Ahmed's going to have end of the month, so it'll be cool to meet some of you guys over there. But appreciate you guys. Thank you for tuning in.